Hey everyone, John Henry here, slingshotfutures.com. Today we're going to be going over the weekly outlook for our favorite futures markets, starting off with crude oil, then moving over to the S&P, the Dow, and the Nasdaq. Now, looking at crude oil first, what do we have? Well, today we have finally an attempted break out of the consolidation. The big issue that we've been dealing with on crude is simply that we've been stuck in this really gross range for a while, and we just needed them to kind of get it out of their system, right? Break out or just do something, right? Get away from all this stuff so we can kind of open up the doors a little bit. They tried breaking out through the lows, and they ended up meeting into that previous major structural support, which is down there at 51.50, and finding a rejection right back up. Now currently trading at 52.35. It's jumped almost $1 since then, and it's been having a pretty good run overall to the upside. But one of the big issues, of course, is guess what? We're right back in the middle of the range again. So with the middle of the range coming into play here, we kind of have to keep an eye on the fact that, well, you know, we might have to redraw some of our levels of support or resistance to that new low that just formed. But along with that, we need to kind of keep an eye on how the market wants to respond to this, right? That's not really what we wanted to see in terms of, you know, general location of what it's doing. I don't want to see it back in the range again. But because it's back in this range, well, we're just going to kind of have to deal with it for a little while. So since it's back in the range, we did just come off of the bottom side failure. It tried to break out through the bottom, and it failed. Now, with that failed breakdown, that did also come off of major support at 51.50. So that begs the question of, okay, well, you know, if it's such a strong move down, then the sellers just completely fell apart. We should likely see the buyers make another attempt. But that is a little bit of an early statement. We don't have any reason to believe that there's a trend shift. There's nothing like that. We have a situation that we don't have new swing highs. We don't have a higher low. We don't have anything proving that it's in a bull trend other than just speculative previous levels of major support, which are holding, don't get me wrong. But we need a little bit more before we really hit the gas pedal to the upside. So because of that fact, I have to assume that if it comes back up to these highs, we're going to be bouncing off of previous structural resistance right around that $53 mark, and sellers will be looking to fade down. Now that will be a new high, right? We'll be making a new swing high if that does occur. And if they hold a higher low and turn back up through a new high, then we have some proof. But there's a lot of things that need to happen before that. We have the trap low, we have the major structural support area bounce. Everything is looking really good from that perspective. The big thing that we need to see now is the buyers step up and break through this falling resistance, get above that, right? Make a new swing high and start pushing into some of these previous levels, showing that the buyers want to continue. Because until that happens, we're probably just going to be stuck in a range again. Now, we do also want to keep in mind that we do have a potential bear move to the downside in terms of the fibs, at least, that we want to keep an eye on. So let's load our bear fib template here. So it's red. There we go. So the next area of interest is going to be the 50%. Now, we could also argue a 38.2, which is roughly right around there, but we don't need another level inside there. We already have several levels of horizontal resistance. A 382 is just going to be kind of redundant. So the next thing we have above that is going to be a 50%, and that's right there. That's kind of the seller magnet that sellers are going to give one more shot to, but if that starts losing grip, then we could very well start seeing that turning point where we're running back up towards the top. Again, at the moment, we're likely range-bound to slightly bearish still because we don't have any proof that the trend is changing. There's a lot of things that need to happen before we gain that proof. So really, that's kind of what we're waiting for at the moment. We just need to see that little bit of extra from the buyers to really kind of put the nail in the coffin. Now, you know, again, playing devil's advocate here, we do have plenty of reason to believe that there is some large support coming in. You know, we have multiple pushes to the downside. We have 1, 2, and 3 with a retest that failed. So likely the big thing that I'm looking for here coming into this week is a retest of that base. That base support right there at 51.80. That's going to be the line in the sand for me. If we can come back down to that, close. Let's try that again. If we can come back down to that level of support, the anticipated move is going to be a bounce move off of this to attempt to hold those highs. And from there, kind of what we're looking for here is that horizontal support. I want to see the market try to break down, fail, come back, hold it as support. That would give us our higher low and higher high scenario that we need as proof. So that's kind of what I'm looking at right now in terms of more of a structural basis on crude oil before we can start really seeing the buyers step up. Over on the S&P, very similar situation. We have another one of these kind of levels of support that had to migrate down a little bit. That's right here. But the big thing that we're keeping an eye on at the moment is simply the fact that the market really held quite beautifully, actually, a negative 618 deviation at the highs. That was right there. That also coincided with a previous trap high, and a lot of things happening there for the sell side move this morning. Now that that's kind of out of the way, what we have left is the buyers trying to hold this move back to the upside. The big thing that's notable here is that they had this major structural level of support. They tried to break down. They even used it as resistance 2 times. And now we've fired back off to the upside and are coming back down. And that gives us an area of interest. Now that we have an attempted breakdown point, which was a complete failure, I want to see the market pull back and find support there this time around. And that support is going to be right there. That green line at 26.93 and a quarter. So again, same situation. We have a rush down to major support, a bounce, a breakout attempt, which failed. Now we expect them to come back and give us a secondary structural bounce right there. Now, are they going to be able to get it? Well, you know, it's questionable because we have a few different lows to work with. I think if you were being a little bit more what's the best way to put it? Aggressive, then you'd be looking at around that, wow, it's really crunched up, 26.95 half area. And that's where I'm going to leave it for now because that seems to be kind of the best rounded point that has support and resistance all kind of jumping around that same location. So that's where I'm going to leave that. But if you wanted to play it conservative, you could drive it down a little bit further, like the price that we were just talking about, which is going to be at around 26.93 and a quarter. But I'm going to be keeping an eye on 95.5 to see if they want to run into some support. Now, if the buy move does fail here, if it pulls back, hits it, but it doesn't get that bounce that they need, then we're looking for a deviation target to the downside of 26.71 and 3/4 if you round up. And that's kind of the objective here. We had this really nice rally to the upside, and it completely failed down. And when you see that sharp of a reversal, a lot of times they're gunning for that deviation move, and that puts support at 26.71 and 3/4, and if that breaks down, the next support at 26.56 and a quarter as areas of interest. Now, this is starting to get a little bit jumbled up in terms of the way that it looks. There's a lot of support and resistance and just kind of things that are kind of jumping around in the chart here. So let's try to clean this up a little bit more. Let's see here. Let's anchor. That's right here. Where's that anchor point? There it is. All right, let's widen that up a little bit to that high. Now that we have it up on that high, we can draw down from there, and that will give us a little bit more to work with in terms of falling resistance. Now, the rising level of support, same problem. We have a few things that are kind of getting in the way here. So let's draw that one. It's not really doing much. That one's not really doing much either, so we can kind of clean those up a little bit. That way it's not such a mess. And even then, it's still pretty gross looking. But a few things that we need to keep in mind. We do have a bear move to the downside. This is supposed to be the bear one. I don't know why it turned green, but they broke through the 38, they broke through the 50, and they tested the 618. So the sellers are trying to hold the 618 to the downside on the S&P. If that begins to fail, which arguably they did make an attempt at, if that begins to fail, then we're looking for more continuation to the upside. Usually when the 618 loses its grip, that's where the market starts really finding its reversal legs. It might still find some resistance at the 786, but really I think the big thing that I'm looking for is the market to turn down and tap that area of support because there's so many things there. We have horizontal support, we have a retest of the inside swing, major structural support, and if we draw a fib from the bottom edge, we have a Fibonacci. Guess what? We've got a Fibonacci 61.8 smack in the middle of all of that. So if it wasn't good enough, we also have a 618 that's lining up inside of there that's adding even more. I mean, look how many things are stacked up inside of here. So the major level that I'm looking for in the S&P is right around that 26.97, 26.95, somewhere inside of that couple point range to find support to push the market back up again. We'll have to wait and see what they want to do. Let's go forward here into the Dow. Now the Dow has a similar situation. It is getting kind of gross and choppy, but they are holding the bear 618. That is all lining up really, really well. And we do have a new swing high to work with on top of that. New structural level of support coming into play here that is giving us something to work with that we can anchor on all of these other lows off of, which is giving us a lot of different levels, but they're all right around the same area. And if we can get the market to pull back to that inside swing here as well, that would be around 24,933. But if you wanted to play aggressive, you could technically consider this area here at 24,965 as that level. So 24,965 is going to be the slightly more aggressive, but really strong area of interest that we want to keep an eye on going into later this afternoon or just later this week, depending on how fast it wants to pull back. That is the zone that is anticipated to find a good amount of support, just like we were looking at in the S&P. You'll find pretty frequently the S&P and the Dow have a very similar situation in terms of support and resistance, so just kind of have to keep an eye on it. Here again, if we draw a fib from bottom to top, this time around it doesn't really line up as well. It's kind of chopped in the middle. The 786 is a little bit further down below that, so it's not as clean as we saw in the S&P, but I am still looking for that area as an area of interest, at least for short-term scalping opportunities and potentially longer-term holds for a rally up to make that new swing high, higher low, right? We have a higher high. We broke above these inside swings. Now we have a potential higher low if it goes back up again, and that's kind of what we're waiting to see. Looking good there. And then over on the Nasdaq, very similar situation, except this time we don't have to really change anything or add a new level. Their major level of support has been the same from the hourly chart for months and months now. That's 68.65. That's the big line in the sand. They tried breaking underneath it and failed back up again. It is very likely, or probable at least, that we see a retest of that level after we've had a nice rally to a new high. We technically do have a higher low, but that's such a small little inside swing that I really don't care about it. I want to see something that's visually obvious. So that's more along the lines of what I'm looking for there. So for the Nasdaq, honestly, the analysis stays the same. They're holding their bear 618. We have a buy side move to the upside, and that looks to be about a 786 coming into that support at 68.65, and that level we've already known about for a long time. Everything is lining up. Yeah, look at that 786. That's almost perfect. So let's get rid of all the other levels. Those ones are irrelevant. We've got a nice move, and everything is setting up for that bounce support at around 65 on the Nasdaq. So everything is pointing to attempted support on the index markets, and if that support loses its grip, that's where things can get pretty nasty. Notably on the Nasdaq, more so than the Dow and the S&P, is that we have a situation that kind of looks like a head and shoulders. And if it is a head and shoulders, as we've talked about multiple times, a head and shoulders pattern is a continuation pattern, but it's a continuation pattern after a deep correction. And what that means is sellers are going to be looking for the breakdown, and if you measure the high of the shoulder and drop down, not 100%, right, but 200%, that's that level of support. And guess what? That lines up almost perfectly with 65.80 and a half. So let's just pretend that this does end up being a head and shoulders pattern, right? So we'd be looking for a deviation support at 200% of the downside move. Now I'm going to make this red just so it stands out. Let's make it red, not risk reward. We need red bear. There we go. And that gives us a 200% objective if we measure this entire thing all the way down here at 64.45 half. That's the hot spot. Now, obviously, that's a little bit of a ways away. Just eyeballing it, obviously, I wasn't very close. But we're looking for that major support level at 64.45 if this does want to end up turning into some form of a head and shoulders pattern. Now, again, that's still speculation. We don't have proof of that yet. But we do have the neckline that's forming right there, right? So if we get a neckline break to the downside and that buy support here fails, that's why we're saying, you know, this is something that could turn really ugly really fast if the buyers don't show up to defend. And if they don't show up to defend, we could be looking for an extended move to the downside here on the Nasdaq. Again, just speculation right now. We don't have enough proof to really say that that's going to be the case or not, but until we get a little bit more proof, right now I'm looking for buy support to come in off of that 68.65 area. That level has been there for months now, so it wouldn't be surprised at all to see it chop around there, maybe get a nice little bounce going into this week. But that's going to do it for the overall overview. Everything is looking pretty similar on the index markets. We're a little bit range-bound and choppy-sloppy today, but if we can get a little more pullback, we can dip into some of those major support levels and catch a nice bounce to the upside. If those buyers fail, then we're looking for a potential strong breakdown that could lead into a bear market once again. Over on crude oil, we're just kind of range-bound. They attempted to break down through the lows, failed, looking for an inside retest of 51.80 going into the next couple of days to see if we can get a bounce for continuation to the upside. Again, a caveat, we do not have proof that crude oil is changing direction. We don't have higher highs, higher lows. We have nothing like that. It's mostly just purely intraday bouncing that's going to be going on at 51.80, but it could be the start of a longer-term move. Probabilities are low right now because we don't have that excess proof, but if it can gain that, you never know. You might have one nice breakout move going to the upside that could procure a much larger move back towards 53 to 54. So we'll have to wait and see. But that's going to be the overview. I hope you found this useful. I hope you found it something that you can add to your tool belt, or maybe, add something that maybe you missed, and yeah, we can go from there. If I missed something, post it in the comments. We can make it a little bit more interactive, if you will. But that's going to do it for this one. Again, I hope you found it useful, interesting, entertaining, maybe something you can add to your tool belt. If you comment on it with something that I missed, maybe something I can add to my tool belt. Who knows? But that's going to do it for this one. I hope you had a fantastic trading day today. I hope you have a fantastic trading week ahead. Don't forget Valentine's Day. Hey, it's going to be Valentine's Day this week. Don't miss it, right? Don't forget about that. Get all the presents, get what you need to do out of the way so you don't end up in the doghouse with your SO. Anyway, that's going to do it for this one. Enjoy, and we'll see you in the next one. Thanks.